Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10:15, markets have given up the opening gains that we had witnessed, but still trading in a little bit of green with marginal gains. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee dollar and crude oil. Sensex is up about 170 odd points. 81,860 is the level on Sensex. Nifty up 20 points. 25,035 is the level on Nifty spot. Bank Nifty up 60 odd points. 51,530 is the level on Bank Nifty. Rupee dollar equation and crude oil, marginal strength in the rupee against the dollar of 0.01 paise, and the level is 83.96 rupees to $1. And of course on crude oil, after seeing spike over the last week news flows in the situation in Middle East, we are seeing some lower levels this morning on crude oil. Brent is trading at about $77.76 a barrel, and NYMEX is trading at about $74.19 to a barrel. So on crude oil and rupee, I think undoubtedly crude oil prices will be determined as far as the situation in Middle East is concerned, as we've been discussed plenty of times over the last couple of months. And in terms of consumption, not such a positive kind of an uptick can be seen because consumption is low, demand is low. On the supply side, OPEC plus nations have made certain statements with respect to the situation in Middle East and their production output, and of course the inventory levels in US. So more than on the fundamental side, the demand supply side news flows, I think crude oil, like we've discussed earlier, will be driven by the situation in Middle East, and of course the great Strait of Hormuz, which has a large part of crude oil supplies going in and out to the rest of the world. In case if there is some kind of restrictions over there, then that can be a little bit more severe impact in terms of supply, and there could be a little bit of more elevated levels. So difficult to predict levels, but possibly expect that there is no significant increase in conflict and the situation as far as Strait of Hormuz is concerned. On the rupee dollar, like earlier times, we have mentioned that whenever rupee weakens to the dollar to the levels of 84 rupees to a dollar, then dollar supply comes into the market, whether it is from RBI or whether it is from banks, remains to be seen. So the rupee level could be viewed in terms of gaining some strength, and lower levels of 83.85, 83.80 could be seen, and on the higher side 84 and a crossover of 84 against $1 can open up a little bit of more weakness on the rupee against the dollar. Now coming to the market, friends. So we've seen a lot of choppiness, we've seen a lot of volatility, we've seen news flows impacting global markets, including our market, so nothing new. But the fact of the matter is that from the levels of 26,200 plus to the levels of 25,000, where we are trading somewhere close to about that, the correction has been good enough. Market looks to be in an oversold trajectory, at least from the time being, short to medium term. Some buying can be seen at lower levels, but not enough to support the momentum on the upside. So one needs to be a little bit careful, cautious as far as short term, medium term pullbacks in the markets are concerned. And if you're a trader, if you're a short term, medium term investor, if you get pullbacks, don't try to chase your profits to a much higher level. Keep your expectations low is what we would recommend from a trader's point of view. But if you're an investor, I think conflicts like this have been witnessed by markets and global markets earlier as well. And incidentally, today is 7th of October 24. Today completes the 1 year of the conflict in Middle East as far as attack on Israel is concerned. From Gaza, we all know what happened last year, and of course the story has evolved after that. Other neighboring nations and entities have tried to jump into this fire. So the situation is a little bit difficult as far as Middle East is concerned, and like we said, escalation and the development as far as the supply side Strait of Hormuz is concerned will be keenly watched by global commodity markets, especially with respect to crude oil prices. US job data, which came overnight, was supportive, but no significant impact on our markets as far as that data point is concerned. Q2 earnings from 10th of October, we will have large numbers coming in, and then followed by other corporates who will announce their Q2 earnings for the rest of the remaining part of October and early part of November. So direction and stock specific movement will be where the spotlight will be. As far as our view on the Q2 earning is concerned, and of course the statements made by certain banks and NBFCs in terms of business outlook with respect to deposits, advances and CASA number, it has been a mixed bag. Some it has been in line, some it has been a little bit disappointing. So we'll have to wait and watch as far as what numbers tell us in terms of performance for corporate India for second quarter this financial year. Levels as far as Nifty is concerned, on the lower side and higher side, like we always give. Two levels on the lower side, 25,000 and 24,800, and 24,800 remains to be a key level in terms of the resistance that we saw before we made a new lifetime high. And that's going to be the range. So 25,000, 24,800 on the lower side, 25,200 to 25,400 on the high side. It's going to be a broad range as far as spot Nifty is concerned. And we may trade with a lot of choppiness and volatility, friends. Pullbacks will be witnessed as short covering rather than fresh, large volume buying. And resistance on the higher level crossovers will be witnessed as new short side positions opening up. So it's going to be a very difficult pull and push by the bulls and the bears. We need to be prepared for this time of volatility to be sustained. But if you are an investor, friends, we have seen this kind of situations earlier. Before that, before this Gaza, Israel, Hamas, Israel, Iran, Israel, Lebanon, Israel conflict, we witnessed Ukraine, Russia-Ukraine conflict. Markets recovered from those levels. If you actually just go in the past and see the levels where we were when these conflicts erupted and to the levels where we have reached post those conflicts, then you will get an idea as to what kind of recovery market has given. So in both these situations and even before that, markets have recovered. Even during COVID, worst case scenario, we were capable to recover from those kind of lows. So I think it's a situation which needs to be dealt with a little bit of cautious from a short to medium term point of view. But if you are an investor, I think the entire market looks attractive as far as fundamentally strong large cap, mid cap and certain select small cap names are concerned. And a tailwind of, like I mentioned, second quarter earnings. There is also a news flow, friend, that some FIIs have made statements in terms of reducing their weightage in India and shifting to China because of the stimulus and easing that has been offered by China. There were a lot of questions that were put forward to us. So our observation was, and of course the concern by those foreign institutions, one of them was rising crude oil prices. Other one was primary market sucking a lot of liquidity from secondary market. And the third one was, of course, in terms of valuation. So valuation, to answer the last point first, valuation depends as to how you look at the market, with what kind of time horizon. So that's a subjective matter. As far as the IPO market and liquidity sucked out from secondary market and going into primary markets, well, we've seen a lot of new paper in terms of primary market coming into India and getting subscription, overwhelming subscription, and at the same time secondary markets making a new lifetime high. So, and not only this year, even last year and the year before, actually, if you go to see, liquidity is not a problem. Now coming to the first argument that they put forward in terms of crude oil prices. So India is not the only emerging market country which consumes a large part of crude oil which is produced across the globe. China is in fact a larger importer than India in terms of crude oil requirement. this stimulus this rising crude oil prices will have its impact on China as much as it will have on India and the rest of the emerging market who are dependent on imports of crude oil. So that argument I have put to rest in terms of crude oil prices moving high and India will be on the negative side and China will. I don't think so. Both emerging market countries, India and China, and they are compared parallelly whenever we talk about emerging markets. So we feel that if crude oil prices have to impact India, it will impact China and the rest of the emerging market pack. It's not only that it will be limited to India. Secondly, observation was that the bilateral trade with Russia and Iran has enabled us to get crude oil and natural gas at a discounted price, and I think that remains to be seen as to how government takes it forward in case if there is escalation in Middle East and there is a supply side issue in terms of Strait of Hormuz, etc., etc. So this argument that will FIIs sell India, which will lead to downside pressure and go into China, well, I think only time will tell us. And even earlier also, not only in the month of October, September, August, and even before that, even post-COVID, even during Russia-Ukraine conflict, even during this Israel and Hamas conflict, FIIs have sold, but our domestic institutions and retail investors have managed to hold on to the courage and committed to the markets from a long term. Gone are the days when this kind of situation used to escalate into a large local selling rather than foreign FIIs selling. So I think it's a matter of time. These things would also settle down. So if you are an investor, friends, as always, we believe that these are great times to invest into markets. The way markets have fallen and the way we witnessed the recovery that has come, I wouldn't be surprised if the same is replicated even this time, as and when the situation starts to ease off. So short to medium term, yes, there are problems, but long term, I don't think there is any major severe downward kind of view that can be formed in this kind of a present scenario. State election outcome, we have been witnessing some state elections, and outcome of that may also have its impact depending upon which way the results of those state elections, which are the states under voting and which are likely to go for voting for state elections. So that remains to be a domestic kind of a trigger which markets may have a focus on, and depending upon the outcome of those state elections, the short to medium term impact will be on the markets. But overall, I think long term story still remains intact. Long term investment ideas are still looking very, very attractive. And in terms of stock picking is something that you need to be very, very careful. Now, since the markets have corrected from 26,200 plus levels on the Nifty towards maybe closer to 25,000 as we speak, rather than going in for mid-cap sectorial themes, we felt that it is prudent to address investment ideas into large cap. And our thought process in this advice for long term into these two large cap is, if you want to put in lump sum, depending upon your risk appetite, you can take that decision. But if you are a little bit risk averse and you feel that no, I will get opportunity in the future because of the conflict and because of the situation of the market, and you want sell India, buy China, etc. If you feel that you are likely to get a little bit of lower level, then in that case, at least make a very humble beginning at current levels in these two stocks. I'll definitely give out the names along with the targets. Start at current levels and add on dips, or you can possibly switch on to a SIP mode. That is, every month, if whatever investable amount you have, you can buy some quantity of both these stocks proportionately divided into equal parts. So the first name is, both are in fact large cap names in their respective sector and diversified companies. Reliance Industries is the first one. From being a traditional run company to a new age, more so technology oriented company, we believe that whatever announcement made during the last AGM augurs extremely well for the outlook as far as Reliance Industries is concerned. So you have exploration, you have refining, you have telecom, you have retail, you have digital, you have oil to chemicals and whatnot, and of course green hydrogen. So all this augurs extremely well, and whenever markets give you this kind of opportunity, friends, I think it is always prudent to look at large cap names. Valuation wise, they may look a little bit larger. Hence, this advice that buy some at current levels and add on dips or do a SIP, so you get advantage of averaging over a longer period of time. So the target that currently we have set aside, of course, like I mentioned at the beginning of this market outlook, that Q2 earnings is likely to unfold from 10th of October. So if the earnings is going to be good, targets will get revised. But currently the target stands for Reliance, it is 3,400, and in terms of risk reward, we feel it's very, very favorable. So the first investment idea from a long-term point of view is Reliance Industries with the target of 3,400. The second one, friend, is a more than I think 7 or 8 decade old company established in India called Larsen & Toubro, LNT Limited. You talk about complex turnkey project, you talk about defense, you talk about hydrocarbon, you talk about infrastructure, and you talk about any kind of challenges that comes. This company is the first ones to stand out and sort out all those problems. So given the diversified businesses that L&T is into, we believe that this is a great investment opportunity in L&T as well, that is Larsen & Toubro. The target that we have set aside currently is about close to 4,200. But again, like I mentioned, Cap Goods Engineering company, flagship company, you can't compare quarter on quarter numbers as far as L&T is concerned because of the large size order book and more importantly, the kind of complexities in terms of technology and precision orders that this company has L&T. It has to be at least 1 year, 1.5, 2 year plus kind of evaluation that you should do because of the complex nature of the business and the order book. So order book across different verticals is extremely strong. Government's focus into exploring natural resources in India to reduce our dependency, especially with crude oil and natural gas, will enable companies like L&T who are actively frontline players for hydrocarbon business. So we believe that this is also a great company. So this was the thought process, friends, basically to identify in a market like this when there is fear all around. I think one needs to have a little bit of courage, one confidence and long-term investment approach. So these two are the long-term investment ideas. Friends, here again in L&T, like we mentioned in Reliance, start at current levels. If you want to put at one time, it's your choice depending upon your risk appetite. But if you want to risk averse, start at current levels and on dips, add on to the stock. Or else, best approach would be do a SIP in L&T as well. And like I mentioned, whatever amount you have to invest, divide into two equal proportions and buy equal quantity of shares, whatever is possible from your side. But markets, friends, before I close, it is going to be choppy, it's going to be volatile. You will have days of opening in the green and then fizzling it off, or you will have a weak opening and then recovery in the markets by the time the markets end. But short to medium term, expect a little bit of choppiness. And I think finally, people who have the confidence, courage to commit in times when there is absolute negativity, pessimistic approach, that's the time when you have to create wealth and invest into very strong fundamental sound companies. On this note, friends, I will take your leave. Thank you very much for your patience hearing. I'll see you again possibly next week or week after that. Please do take care of your health and have a long-term approach in the stock market in situation like this. Patience is something that you will definitely need. So I'll possibly see you next week or the week after. Till then, please do take care of your health. Bye.